Okay, what is the best time to enter the crypto market? So, welcome to DYOR series part 2. And are you curious about finding the best crypto projects? Well, let's start by exploring the most popular search methods, starting with Twitter. But hold on a bit, we have a first part already available to watch, so I strongly advise you to do that first. Now, did you know that many crypto projects are born on this social network? So here is how you can use it to your advantage. Step number 1, create a Twitter account for yourself. Number 2, just follow the influencers, alpha hunters, and basically cool personalities in the crypto space. Step number 3, Twitter will suggest interesting accounts to you, so you better be prepared. And step number 4, spend just 30 minutes to an hour actively scrolling through your feed. So keep track of your findings by creating a table to track interesting projects and deleting unnecessary ones. Of course, if you want to dive even deeper, well, there are even more advanced methods to explore. For instance, you can manually monitor the accounts of alpha hunters you follow and see what projects they subscribe to. Or you can use public services like SocialDoc to analyze an account based on public data. And by the way, all the links can be found in the description. Finally, if you are tech savvy, you can even create custom scripts to automatically check for new subscriptions from your database of alpha hunters. And yes, there are ready-made solutions. First up, we have twitterscout.io, where you can discover just dozens of alpha projects every day that are still under the radar. While this feature requires a paid subscription, some free ones are still useful for you to research. But if you don't want to pay, you can try Twitter Web3 Alerts instead. But what if you prefer a more exclusive approach? So, private groups can be a great option here. People in such communities like to share good information for their own, and you only need a few groups to get all the information you need. Guess what? Private groups are not necessarily paid. Now, if you want to take it up a notch, you can try to get into an alpha Discord group. These groups are closed communities that are often impossible to join, well, even if you pay. But if you manage to get in, you'll be among the first to hear about the hottest NFT projects. Finally, for the most sophisticated researchers out there, YouTube channels can be a goldmine of information. While creating quality videos takes time, some channels are worth checking out. For example, Giancarlo Buys Tokens is a great channel that makes compilations of hype mints and talks about various metas within NFTs. Okay, let's continue with some universal research methods that you can use to investigate different types of projects. So let's take Twitter first. Okay, you've stumbled upon the project's Twitter account, but there is not much information available. So where do you start? Just don't worry, we've got some tricks for you in our sleeve. First, check the followers. So it's not about the number of followers, but rather their authenticity. So are they real people or just bots? Also, look for any well-known people who are subscribed to the account, and this can be a very good sign. Next, check who the project is following. Often, you'll find the founders or development studio. This can lead you to their profiles, where you might find more info about this project. Next, let's move on to the website. This is like the project's second phase and can give you a lot of insight into the project. Look for things like the team information, website design, and server location. For example, if the website is lagging or it looks like it was made from a template, this could be red flags. Also, check to see if the site is in English and if the team information is present. Finally, if you want to go the extra mile, check this server location. If the project claims to be based in one country, but its servers allocated in another, this could be a warning sign. So by using these methods, you'll be able to separate the real projects from the scams. Well, let's start by talking about the importance of a project's team. First off, if a team is completely anonymous and doesn't even show their Twitter avatars with NFTs, that's a huge red flag. So, what should you look for when checking out a team? Well, ideally, you want to find their LinkedIn and Twitter profiles. Okay, LinkedIn is like a work log in the format of a social network, where everyone records their work achievements. So, if the team members have completed profiles on LinkedIn and their previous jobs include successful IT startups, venture capital funds, or even big companies like Google, Microsoft, Meta, and so on, well, that's a very good sign that they know how to build successful projects. On LinkedIn, it's also worth checking out the team's higher education. Well, it may seem like nobody in the IT world cares about a university degree, but statistics say otherwise. If there is no LinkedIn, then check the team members' Twitter accounts. Also, look for their score on TweetScout. If the score is close to 0 and no one from crypto community is following them, well, that's a bad sign. Well, ideally, the developers should already have an audience of tens of thousands of people, because this way your potential investment can receive recognizability and support from subscribers right from the start. And by the way, don't forget to check everyone on Google. Well, just make sure that they are who they say they are, because scammers often use other people's identities as their team. The team's experience and background are also extremely important. So look for people with successful projects from Web3. A deep understanding of the industry's features greatly increases the chances of success. It is also essential that one of the key members of the team is responsible for the technical aspect. Additionally, pay attention to the size of the whole team, although such information is not often made public. Now, let's talk about stereotypes. Well, if the product is made by a CIS, Indian, Philippine team, the chances of failure or even scam, well, statistically increase. I don't mean to offend anyone, because these are just stereotypes that might be wrong sometimes. So first up is cheap labor. In these countries, an hour of a programmer's work is much cheaper than in the US or Europe. So if the idea doesn't gain popularity, the team might abandon it and start a new one. Next, we have community. Projects with such teams offer start development from their country's audience. It's just people from poor regions perceive crypto as a means of survival and are ready to pour tokens into a glass at the first opportunity. Lack of understanding of the global market. A successful project must be designed for the broadest and most financially capable audience, well, the English-speaking one. Without good advisors, developers may find it difficult to understand what the mass foreign user wants. And lastly, we have lack of connection. So a big idea needs big capital, which is concentrated in the hands of small number of people. So if the team doesn't have strong ties to the community or venture capital funds, then it may be challenging to find financing. If you're just starting out, one of the most important things to remember is the golden rule of long-term investing. Don't buy what you don't understand. So before you invest your hard-earned money, make sure you fully understand the idea behind the project you're interested in. The best way to do this is just by reading the white paper. A good white paper should answer questions like, what problem does the project solve and how does it solve it? Another thing to consider is the project's roadmap. A roadmap is like a detailed plan that outlines the project's goals and which technologies will be implemented at each stage. A great example of project with a good roadmap is obviously Ethereum. Their transition from proof of work to proof of stake was a big deal in the market, and of course was planned out in advance. However, it's important to keep in mind that the roadmap should set realistic goals about time and budget. It's also worth paying attention to trends in the crypto market. So if there is a clear trend in a particular direction, like with DeFi for example, you might notice similar projects popping up and lots of chatter about them on social media. When there is a trend, it's worth considering investing in that direction. but it's important to be very careful. Trends can be short-lived, and it's important to get out before the peak of euphoria. Remember, investing in crypto can be exciting, but it is important to do your own research and understand what you're investing in before making any decisions. One of the biggest questions projects have to answer is how to raise capital. Without a lot of money, it's practically impossible to build a big company. So let's dive into why funds are needed in general. Firstly, funds provide money to startups in exchange for a share of their equity or tokens. But it's not just about money. So when they get funding from major venture capitals, they also get access to a team of professionals who can help with building a business model, marketing, reducing operational costs, and more. Plus, funds invest in many projects, meaning they have connections to hundreds and thousands of specialists worldwide. And when a cool fund invests in a company, it sends a strong signal to the market that they must be worth watching. But how much funding should startups aim for? Investing $100 or $200 million in a token might make the minimum fully diluted valuation approach $1 billion, making it harder for early investors to get reasonable returns on the listing. On the other hand, if too little is invested, it may mean that they don't simply believe in the project. So ideally, investments of like $5 to $20 million leave good space for returns on the listing and enough money to build a great team and develop the product. Lastly, it's important to know who exactly gave money to the developers. If top funds contribute money to the project, well, that's a good sign. And if one of them leads the investment round, even better. Okay, next, let's talk about competitors and why it is important to know them when researching a project. So yeah, let's face it, coming up with a great idea all of a sudden on your own is, well, pretty rare. There is a good chance that someone else out there has already thought of something similar or is already working on it. That is why it is crucial to study competitors before going full steam ahead with the chosen project. So where do we start? Well, always we turn to our trusty friend Google and search for the project idea in 2 simple words. This will help us get an idea of who the competitors are. But how do we compare them? Well, we can start by looking at their readiness stage. If the project you're interested in is still in the team formation phase, it might be a good idea to check out competitors who are closer to the release or already have working solutions. Next, we can take a look at the team behind the project. So, who are they? Do they have the necessary skills and experience to make the project successful? We can also quickly check out their social media accounts. Who has the most followers, engagement, and real people commenting? In the end, we all want to know who has the most interest in the project. Another important aspect to consider is market capitalization. If some competitors already have real users or tokens, we can estimate the potential value of their new project. If there are already a ton of similar products out there, it might be quite difficult for a new one to take off. Lastly, we can look at venture capital. So, what kind of investments have competitors attracted? If they have millions from Tier 1 venture capital funds, there is a good chance that a similar project will also receive a lot of money. To make things even easier, we can create a table with all our competitors listed, noting their pros and cons and the main characteristics of their projects. This will help us compare and contrast them so we can make the best decision. Okay, part 2 was really intense, but the third one will come out soon, so stay tuned. And yes, 2023 is the best time to enter the market because all projects are at the bottom and new trends are just emerging. Well, perhaps you will make profits instantly, but you will be prepared for the next bull run. So do your own research.